Welcome, everyone.
Hello, everybody.
Hi everyone, thanks for joining us today.
Yeah,
We'll give everybody a second here to jump on. When you guys are coming in, go ahead and put in the chat where you guys are from. I know that we're gonna have I think we have participants all over the nation, so it'd be really cool to see what city are you from. Go ahead and type that in the chat.
Edmonton.
Got some St. Albert. We got Crystal in the house. Hello, Crystal. Stacy, Fawad, Edmonton, Vanessa, Calgary. We got Robin from Vancouver. Who else we got?
Calgary here too.
Let's see which city wins for the most participation. Who is that going to be? Is it Calgary, Edmonton, Vancouver, Toronto? It's one of the four.
You want to give us some Calgary?
Calgary,
Dallas,
we got Dallas.
States.
Okay, Oliver first Dallas. I like it.
Yeah.
I hope you don't hold the Edmonton versus Dallas series against us or against me from being in Edmonton in this webinar. Damn, that was a good series though. Who else we got here? Give us some more cities.
Do we have anyone from Ontario yet? I see one from BC, Vancouver.
Super, yeah.
All right. Well, we'll get started here in about a minute. We'll just wait for everybody else to jump in. We're excited to have you guys here today. As you guys know, today we are discussing investing in Alberta when it comes to real estate. We're going to be offering you complete transparency. We encourage you to ask questions throughout as well. We want to make it as interactive as possible, okay? We want to make this to be a trustworthy guide for anything real estate. Okay. All right, so today what we're going to do is we are going to be going through a bunch of stuff. It's going to be action-packed. It is going to, we're going to make sure that you knew and you felt like it was the best choice spending your afternoon with us. We are going to be going for about this. It's going to be like just over an hour and 24 minutes now. It's going to go by super fast as well. So today's itinerary, what we're going to be going through is the Alberta Advantage. Just by a show of hands in the chat, who's heard of the Alberta Advantage? So essentially, what is the reason why there's such a large focal point on Alberta? If you've heard about the Alberta Advantage, go ahead and throw a hand up in the chat. We're also going to be going through Alberta's combined economic data, so things like employment, migration, prices, appreciation, vacancy, rent, affordability. We're going to be doing a deep dive into Edmonton, doing a deep dive in Calgary, and then offering up any kind of additional Q&A afterwards. And we're going to give you an opportunity to set up some meetings with us as well for anybody that wants to dive more into either city or maybe both. So we created this, we created the Investing in Alberta Real Estate webinar, which is going to be aired probably every 3.5 to 4 months. We'll let you know when the next one is, and everyone's going to be a little bit different, but there's such a strong demand in the province that we wanted to give everyone an opportunity for good, trustworthy information and an opportunity to meet other investors. So as you're going through this webinar, I want you to ask as many questions as you can, dive into it with both feet. And if you get a couple contacts from the chat that maybe you can contact afterwards for any type of real estate endeavors, professional partners, we're going to have literally everybody here today. I think we have about 80 registered. So. And without further ado, Santosh and Anthony, my co-hosts.
Yeah, so a little bit about us. Santosh and I have been investing ourselves in real estate for over 10 years. We have our own portfolio, mostly comprised of suited properties, some fourplexes, land assembly, and whatnot. And we've decided to join forces a few years ago and help other investors achieve what we've achieved ourselves, and beyond. Yeah, so we're happy to have you here today, and we'll be representing the Calgary side of investing in Alberta.
And a little bit about myself as well. Actually, Santosh, do you want to say anything?
No, I just wanted to thank everyone for taking time out of their afternoon to be here. But yeah, look forward to getting into the weeds in a bit here. So.
Absolutely. A little bit about myself. I started earlier on. I started investing in real estate outside of my primary job. Probably like many of you, I was doing a career that I wasn't overly passionate about, got into real estate as a side hobby, and made every mistake in the book when I first started, probably for my first 3 to 4 properties. Started to learn and made less mistakes along the way, and ended up getting such a strong education in real estate, specifically investment real estate, that now I'm at a point where I can help others. And since then, I've created a real estate team called Calvin Realty, and one of our primary focuses is investment real estate. We work with clients all across Canada and in different countries. I think our farthest client that we're working with right now is from the Middle East. And I've learned very quickly that if you take a phone call from someone in the Middle East, if you don't have the right plan, it's about $7 a minute. So there you go. That's a good learning lesson. But I'm excited to spend some time with you guys this afternoon and get you all educated on Alberta.
Yeah.
Some of the partners we have helping us out today. So it can seem daunting when you're investing outside your neighborhood. Okay, there's naturally a level of comfort when you're investing in your own backyard because of familiarity, but sometimes it doesn't make the most sense. Sometimes the economic factors don't flow with your goals as a real estate investor. So we want to offer you an opportunity to invest outside of your backyard, whether it's Edmonton, Calgary, a different province. Ultimately, it really comes down to having a strong team that helps support you. Don't feel like you need to do all the heavy lifting yourself. There's many different companies and individuals that can go ahead and assist with that heavy lifting. And sometimes investing outside of your backyard can be easier. So these are some of the professional partners that we have sponsoring the event that we work with firsthand that I use for my properties. So we have we have different mortgage brokers, and you want to make sure that everybody is investor focused. If your intention is investment real estate, your mortgage broker to your lawyer, to your contractor, to your property manager, they should all have an idea of how investment real estate works and be fluent in the subject. So these are some of the partners. And if you want to get introduced to any of them afterwards, we're very happy to do so. So we've already kind of got an idea. If you haven't typed in the chat yet what city you're from, please do that please do that now. I also want you guys to type in there as well. If you are investing right now, what's your favorite investing strategy? Go ahead and type that in the chat. What's your favorite investing strategy? Do you do fix and flips? Is it buy and hold? Some considered BRRRR as being an investment strategy or not. Do you do seller financing? You can even talk about where your focus is. Do you do more residential, multifamily? I want to get a good idea of who's here today. Can you guys go ahead and throw that in the chat? So we got buying and hold, but I'm excited to get
Boring buy and hold. I like that.
Yeah.
Boring. Well, Vanessa, we can make it a lot more interesting. The development side of things has been massive for both Edmonton and Calgary. The focus on lots this year has been more extreme than any other year I've ever experienced. And I think due to the cities really being open to the development side of things and allowing the densification, it's really allowed builders to start making a better profit and investors. So we have...
And that's definitely been true of Edmonton and Calgary, right? Seen
Yeah.
that on both sides.
Yeah.
Buy and hold multifamily, 7 to 10 door properties. Nice. Yeah, small multifamily. It's always nice.
Yeah. I think this year more than ever, it's taught us how valuable land actually is. Where a lot of times in the past, there wouldn't really be much discussion or as much discussion on, parcel sizes, lot sizes. This year, when someone's purchasing a property, there hasn't been more focus than I've ever seen. So, if you're buying and hold, like I know Vanessa, you mentioned boring buy and hold. Normally, for investors that we've worked with, there hasn't really been much interest in like, oh, what size a lot is it? It's more focused on like the property, the location. Is it in good condition? How many bedrooms, bathrooms? Are there any kind of capital expenditures required within the first, 2 years? This year more than ever, even if it's a buy and hold for 10 to 15, 20 years, now there's starting to be more of a discussion of, okay, now what's the lot size? What's my exit plan? What's my redevelopment opportunities when I'm ready to exit or change my investment strategy? And it's been really, really good. I think it's a conversation that should have happened years ago, but I'm really happy that it's happening now. So we're going to go ahead and talk about the Alberta Advantage. And again, if you've heard about the Alberta Advantage, put your little hand emoji up. If you haven't, I don't know if you could put a hand emoji down, maybe do like a sad face. Go ahead and throw that in there. The Alberta Advantage is a thing. Affordability is one of the main reasons that people purchase in Alberta. When you're from, I know that like Pankaj, so I've worked with Pankaj a few times, and welcome Pankaj, happy to have you. I know it's 3:00, 3:15 in Toronto right now. And if you ask, someone from Toronto, what's the average price of a single bedroom apartment? They're going to tell you probably closer to 770 to 850,000, depending on location and size. You can get a condo downtown in Edmonton for like $100,000. So not saying it's a good investment, but the affordability side of things is definitely there. You can simply use your equity in some of the larger cities if you own and easily buy an investment property in either Edmonton or Calgary. And we're excited to go through what some of those numbers look like today. So instead of just saying, hey, it's affordable, we're actually going to be showing you what some of those numbers look like. No PST or HST. That saves you quite a bit. So if you're buying a property in a province that has PST or HST, that can be quite an additional cost to that investment. And if you come from Alberta and move into a different province and don't expect it, it can be a little bit of a slap in the face. And there's no land, exactly, no land transfer tax. That's exactly right. Crystal's on it. Lower taxes as well, which is a nice little benefit. We'll keep it rolling here. Favorable landlord laws. This is a big one. Pretty sure I have a good idea. Okay. So the favorable landlord laws, I think most of us, I remember seeing this one interview in, it was an interview done in Toronto, actually, and it was a landlord that had one investment property. And he's a guy that has a family. He has an investment property because he's trying to get ahead and offer, his kids something, something for when he retires, but also something that he can offer his kids. The tenant that he has in this property apparently didn't pay rent for like 6 to 7 months. And no matter how he's going about it with the court system, he cannot kick this tenant out. And he believes that they might be in there for about a year where he has to go ahead and subsidize all expenses, or he's going to be going towards a foreclosure. So I can't remember what outlet it was, but they interviewed him. When I saw that, it really hit me. It really hit me, and I can see how it would be so unattractive to investors watching, and considering getting into the investment world, and because I'd be scared off. And so I think it's important, no matter where you invest, is to understand the landlord rules, understand what it takes to evict somebody. I've been investing since 2013. I haven't evicted anybody yet, or even came close to, so knock on wood. But there's definitely a lot of favorable landlord rules, and there's no rental caps. So meaning this year, we've seen the largest increase in rental amounts that I've ever seen. I think it's the highest it's ever actually been. And we also know that expenses went up this year. So let's put yourself in a landlord mindset. We're going to say that right now, all of your expenses in are 2,000. If interest rates start going up, your mortgage starts going up, say you're on a variable, you were paying 2% before, now it goes to 6%. that's quite a substantial increase in your expenses. Utilities have also gone up. Now, what if you're limited on how much you can charge for rent outside of the 365 days of that lease? You may not be able to continue with that tenant because they won't even cover your basic expenses, and now you're what's in called now you're in what is called a negative cash flow state. So with Alberta, the nice thing is that there's no rental caps, meaning that if we see massive appreciation in rents and we start seeing a massive increase in expenses, we can actually adjust accordingly. So outside the 365 days of a lease, I can increase rents as much as we want. Now, obviously, you don't want to increase it too extreme, or else you might lose a good tenant. We talked about quick evictions. Again, the process can happen relatively fast. The fastest I've ever seen it is that a tenant doesn't pay rent for 7 days and they're evicted within the same month. That is the absolute fastest I've ever seen it. Okay. But you have to make sure that obviously you're going through the right process. And there's what's called the Residential Tenancy Act or the Residential Tenancy Board. If you call them during business hours, you can get through and talk to somebody within 15 minutes typically, and they offer you great advice. And Crystal already threw up the no land transfer taxes, which is a huge advantage as well.
So cover some Alberta numbers. The Alberta economy has been really strong over the last few years. It's definitely something we wanted to highlight. For example, this is the forecast from ATB, which is the Treasury Bank in Alberta. And even though we had a little bit of a slowdown in 2023, as you can see, the forecast is quite good. Even the worst case scenario is actually quite good for GDP growth. So employment numbers, as you can see, since 2022 in that chart, Alberta's been outpacing Canada by a pretty good margin in terms of employment growth. In fact, in August 2024, Alberta created 13,000 jobs, which was more than half of the jobs created in all of Canada were here. In addition, we have the youngest workforce in Canada. And obviously, as population ages, that's actually a pretty big deal. And it's one of the reasons too why we have the highest participation rate for labor out of all provinces in Canada. We also have the highest labor productivity rate as well.
Yeah, so next up, we wanted to touch a bit on net migration. So Alberta's population growth over the last couple of years has been outpacing the national average. We put a picture here from Stats Canada, and you can see Alberta's population growth is around almost close to 4.5% change year over year, as opposed to the rest of the country. So Alberta, as far as population goes, is really booming. Now, one thing to note is people are coming here for a lot of the jobs that are being created right now, but the relatively affordable housing is also driving the surge in population growth here. However, Alberta has been typically associated or historically associated with the oil and gas sector, but in this current boom, it's not the same energy investment cycle that's driving the surge in population, and along with it, real estate prices as well. So we're going to cover a little bit about how the oil and gas industry and the energy sector has kind of changed. But yeah, so next up is population growth. So I put in this chart here just so we can show you that Calgary and Edmonton, as far as population growth goes, are in the top 5 compared to all Canadian metropolitan cities. We also see kind of in the middle of the chart, the 2 orange bars are Lethbridge and Red Deer. So they've also seen significant growth, but obviously they're not in the top 5, being a smaller city. So, okay. Next. So this chart is to highlight the recent economic growth and what's kind of been fueling the economy. Green energy has been a big factor. So Alberta is currently Canada's wind and solar leader, and we did a bit more digging into this, and we found that between now and the next decade, Alberta is expected to grow its wind and solar fleet by 3 to 5 times its current capacity today. There's lots of investments being made in this sector, which is also leading to job creation. Agribusiness has been also booming currently in Alberta. The film industry has really grown. It's grown about 300% in the last 3 years, and Alberta historically has not been associated with film industry. So some major films that were kind of filmed in Alberta were The Last of Us, which is quite popular, the latest Ghostbusters, Jumanji, Brokeback Mountain, Fargo, etc. The logistics industry, warehousing, industrial space, these areas, these aspects have really grown as well. And oil and gas, we have a question mark here. So we're going to cover a little bit more. Anthony's going to cover a little bit more about that in a bit.
Yeah, because the thing with oil and gas is in the past, that was the biggest driver of growth in Alberta's economy, right? And as we'll see on the next slide, the capital expenditure in oil and gas is right now not even back to what it was at the peak in 2013, 2014. And even in the forecast into 2033 is not expected to go back to our last peak. And mind you, that's a forecast from the Alberta Energy Regulator, right? So they have every incentive to put that in a green light. But the key point here is that all of the growth we've seen, both in population, prices rising, it's linked to the diversification of our Alberta economy and not from oil and gas. Oil and gas is still a large contributor of our economy, but it's not what's been pushing the current growth that we have right now. And on the next slide, we'll see that even though the capital expenditure is being lower, we've still been growing production. Production's been growing fairly steadily over the last 15 years or so. And a lot of that is being pushed by technology improvements in the industry. So we can actually produce more barrels of oil while spending less money, which is a really good thing for Canada's overall competitiveness around the world, but obviously Alberta being one of the biggest producer. So housing affordability, we were alluding to that earlier, right? In the Alberta Advantage, that's a big reason why people have been moving to Alberta. And as you can see on there, I love actually this report from RBC Economics to do that every year. They look at the share of household needed to cover ownership cost. And as you can see, Calgary and Edmonton are by far the most affordable markets of the large cities. And there's a few reasons for that. Our median household incomes are higher, and that doesn't even account after tax median household income, which are even higher comparatively. And our housing is affordable. So combined, you get that great affordability. So even if our prices continue to grow, they have a lot of room, right? People are still able to afford to get into home ownership. So market appreciation. So this first slide here is single family properties since 2005. So you can see that there's actually a time around 2007 where Toronto was about the same price as Calgary, and Edmonton was actually not that far behind either. Which is crazy to think today because the gap is so large, right? Prices have just exploded in those markets. And a big reason of that is, as you can see from the chart, from about 2015 until 2021, the Alberta market was flat, and that's true of Edmonton and Calgary. But since 2021, we've seen really good appreciation. And as you can see at the end of the chart, it's been steadily going up at a time where, especially Toronto and Vancouver, has seen a lot more volatility. We're still on the way up. And the next one is the townhouse market. So it's similar story, but I wanted to illustrate some different property types. Montreal is actually, for some reason, a lot more expensive in the townhouse market than we are. And then we have the apartment market. And something I really want to highlight here is the way that the apartment market reacted in both Calgary and Edmonton in the downturn compared to the other investment type that we covered earlier. As you can see, single family and townhomes were fairly stable throughout that whole period. But unfortunately, we saw in the apartment market that both in Edmonton and Calgary, we've seen some fairly significant price reduction. And that's also why we've seen such a high price growth right now. There's a lot of catch up happening from the slump we had in our last downturn. I think you muted, Calvin.
There we go. Prices, Edmonton versus Calgary. What is more affordable? Well, I think everybody knows that Edmonton's more affordable. Each city has its advantages and disadvantages. Just because it's more affordable, it doesn't mean that it's the go-to. And just because Calgary's been seeing slightly higher appreciation, it doesn't mean it's the go-to. Really, when it comes down to investing, is you got to find a city that fits your goals as an investor. Okay. And everybody has different goals. Are your goals to maximize your appreciation? Are your goals to maximize your cash flow? Are you looking for more consistency? It really has to fall in alignment. There's not a right or wrong, but there's the right for you. And that's why it's good to understand, what is that end goal that you have? Is there a city and an asset class that fits within your resources and income or capital that you can dispose into investment real estate that will help you on the right track, right? So these are all the questions. And really, to help you get some guidance, I mean, do exactly what you're doing today. Meet with, Edmonton focused investor realtors, Calgary focused investor realtors. Pick up the phone, call someone from Toronto. I can give you a contact, Ottawa, Vancouver. Let them give you the insight of what's happening in their market, and then go with what you feel is best. That's really what it comes down to. And once you pick a city, then it's going to be establishing your professional team, and then you start the search. Okay, but there's definitely an order to it. We'll go back just for 1 sec, Jess. So for pricing, you guys can follow along. So detached houses, this is going to change. I mean, I feel like this number changes quite a bit every single month. We're about $200,000 less than Calgary in average prices for most asset classes. And these can range as well, right? Depending on if you're buying in an A, B, C, or D area, and we use the alphabet, and you're going to see that alphabet later on in the slides, that reflects desirability of being in a certain area. So if I take Edmonton and I were to look at the most sought after community in Edmonton, the average single family detached might be closer to 900,000, 800,000, right? Or if we go to one of the more affordable communities like Macaulay or Boyle Street, you can get single family detached in there for like 190,000, which is wild if you're from a bigger city. I actually had a Calgary realtor call me up 3 weeks ago and like, Calvin, I was told that you have condos there for 70,000. And this is from Calgary, and he's a realtor and he's been doing it for like a decade. And I was like, yeah, I'm like, I've actually seen condos here for 35,000, and it blew his mind. But it doesn't mean it's a good investment. So I'm not endorsing it. Okay. If you want to get them, I'll show you them. They're kind of funny to look at. They usually have extreme condo fees and massive special assessments, so they really get you on the back end. But it's important to really understand what fits you, and everybody's journey is different, right? Let's go ahead. Average rent prices. As mentioned earlier, we have seen the best rental improvements I've ever seen. There's a client of mine that I've been working with. She's been investing for 50 years. These are the highest rents she's ever experienced right now. If you're in the rental market yourself as a tenant, you realize how difficult it is as well. Vacancy numbers are extremely low. Rent prices are very, very high. Everyone thinks landlords are getting super rich because of the rent prices, but what they don't understand is that there's additional expenses, right? I think I have my tenants, they think I'm like bathing in bathtubs full of $100 bills. Not even close. Some assets do better than others, but the reality is, when expenses go up, and a lot of times, we hope that rents go up as well. So here's some of the averages. There's some really good resources. You guys can use Rent Board as a really good resource, or Rent Faster. Those are really good resources if you want to know what average rents are, but just know that it's always behind. It's kind of like city assessment. City assessments happen July 1st of every month, or every year. And so if you're looking at some kind of like, where does the city assess it? If the market's gone way up and now it's September, October, or it's gone way down, things change. So just know that if the rental market's on a steady incline, it may not be fully reflective of, what actuals are. If you want to know what up-to-date rental prices are, the best thing that you can do is contact a property manager or an investor-focused realtor, and they can go ahead and give you that insight. Okay? All right. Next one we got here is vacancy rates. So we have 2.5% in Edmonton and 1.4% in Calgary. Do you guys think this changes based on community? Yes. Now in the chat, do you think vacancy rates go up in D areas or go down in D areas? Let's see who knows how we use the alphabet to our advantage. Put in the chat. Do you guys think vacancy rates go up in D areas or down in D areas? Someone be courageous. Go up. Very good. We're gonna be vulnerable here today. We're a close little. We're like a bunch of. We're having like a little family reunion of investors today. Today's a safe zone. I'm not saving anything in the chat. Fire anything you want in there, and we're happy to go through it. But yeah, typically in the more challenging areas, vacancy rates can be a little bit higher. So an advantage of going to like an A or a B area is lower vacancy. MLI Select. Who has heard of the MLI Select program? It works with commercial purchasing, and it is an extremely it's a hot button. It is a subject that many builders and developers have been speaking about very heavily for all of 2024. And there's some pros and cons to it. And so it's important to do your research. With the MLI Select program, it essentially allows you, as long as you fit within a certain amount of points, which typically happens, it's easier in Alberta than I think some other provinces, especially when it comes to the rental affordability. It allows you to put a lower percent down with your purchase, so you don't have to be as capital intensive in your down payment. So they've allowed that, and essentially what they're doing is they're trying to create more affordable housing in the cities based on the amount of population growth that we have been seeing and will continue to see. So essentially the city's like, hey, we're seeing a lot of people come in. Where do we find spaces for them? What do we do? So there has to be incentives for builders, developers, investors to be able to densify communities to allow these families in. If we have all this migration coming in, but there's nowhere for anybody to stay, we're really at a problem, right? Homelessness can go way up, right? It can result in some very unattractive results. And so this program is fantastic for some, but doesn't fit everybody. So it's important that you do a deep dive into how it works. And it only works for new construction. So don't think that you can take an MLI Select program, buy a property that's been around for 2+ years. And again, there's a certain point system that you have to fall within. And just a reminder too, I know that a lot of people traditionally focus on residential, go commercial, or start with commercial. Commercial, you always want to start talking to your mortgage broker first, your commercial mortgage broker, and you have to make sure that the financing fits the property. Where with residential, as we know, the financing has to fit the individual. So it's very property first when it comes to this. Anthony, any other points you want to bring up when it comes to the MLI Select program?
Yeah, because I think as you've covered a lot of the positive points of MLI Select, you know, a 95% loan to value, 50-year, even 55-year amortization now. But I think one of the biggest downside longer term is precisely that in Calgary and Edmonton, that program is very easy to use. It's not the case in a lot of other Canadian cities. In Toronto, for example, the maximum rent that you're allowed to use to qualify using the affordability rent level is lower than both Calgary and Edmonton at $13.47 a month. So for someone in Toronto, it's very difficult to use the affordability route, where it's very easy in Calgary and Edmonton. And over time, that will definitely add a lot of supply, which is needed right now. But that is the flip side of those projects, is over the next few years, we do expect to see a lot of them come online and add to the rental supply. A lot of them have very small basement suites as well. So we'll cover a little bit later too on the kind of type of properties we like to invest in. We actually foresee it's going to be difficult to rent some of those lower units just because of the amount that's coming up. Definitely something, like you said, Calvin, that you want to check with your mortgage broker. It's not for everyone, and it's a lot more involved of a process than a regular residential mortgage. It also takes a lot longer. So most people that we see using this product right now are doing it with pre-construction.
All right, deep dive into Edmonton. Let's do it. So if you Google, what's been happening in Edmonton real estate, there's no shortage of news, right? And usually you'll see things of like in regards to population growth, prices, housing starts, records, whether it's rentals or pricing. And just so everybody knows too, like when it comes to rent prices going up, it's always coming to, it always starts at this. And how many of you guys know RAIN, REIN, Real Estate Investor Network? It's a network that's been around forever. Their focus has changed a little bit, but they have this really good graph that shows how GDP leads to increase in population, increase in the workforce, and then triggers higher property value, which then 6 months later triggers higher rents. And so when you're analyzing cities, this diagram is extremely effective to look at. And it can help you better analyze from a macro perspective of where to invest and trying to, instead of it being a gamble, having the best educated direction. Okay, who's ever seen a map like this? I spent so much time on this. I've really had to practice my Bob Ross. How do you guys think I did? Did I do okay? You know what? If you think this map looks like shit, and I'm allowed to swear because we're hosting this, you should have seen what my map looked like before. It was way worse. I had my marketing department put this together for me because my lines were sloppy. It was gross. You guys would be like, Calvin, this is a disappointment. And then I'd be embarrassed, but then I'd snap out of it and get back into it. So this map we created, funny enough, one of my first investment meetings back in like 2018, I created a map like this because I keep on getting asked like, Calvin, I don't really know about Edmonton. I want to look at Edmonton through the investor lens. And again, when you're looking at investing in a city, and you don't have to worry about screenshotting it, like looking at your computer, like, oh, how do I screenshot again? We're going to send this out to you guys afterwards. So you guys are going to have everything. We're not holding anything back. So if you're scrambling on how to screenshot, this is going to be sent to you. Okay. But I got a question early on, like, Calvin, I can look at, I can Google areas. I can Google Roslyn. I can Google, around the U of A, and it can show me how, I can see how much crime, I can see vacancy rates, but I really don't know which area is best for me to invest in. And so I wanted to create a map that really spoke a lot to investors. And one thing I want you guys to do, for everybody that's here right now, can you guys get a pen and paper? And if you have a partner available, don't cheat and look at their sheet because it's an individual exercise. Can you guys do this for me for a sec? Get a pen, get a paper, and I want you to write down these 4 variables. And depending on how you rate these 4 variables is going to be where I recommend you invest in Edmonton. And now this changes for every city and so on, but I find this this helps me better understand the direction you're looking at going to. So in no particular order, what you're going to write down first is vacancy. So go on your sheet, write down vacancy. Then you're going to write down tenant profile. So vacancy, I'll do a quick description. Vacancy, the higher the percentage, the lower the occupancy, meaning that you're going to have a vacant unit or higher probability of having a vacant unit with a higher percentage. So it kind of works against the way most percentages work. The lower the percent for vacancy is better. Tenant profiles, who's most likely to occupy the unit based on that location? Is it near, is it near a government center? Is it near industrial manufacturing plants? Is it in a residential area? Is it in the suburbs? You got to look at the workforce that's happening in that area to kind of have a good idea. Young professionals, students, all that kind of stuff. So tenant profile is number 2. Number 3 is cash flow. And number 4 is appreciation. So like I said, we're already, we're a tight family here today. You can be vulnerable. Can someone type in the chat the order that is most important to them? And Vanessa said, how's Queen Mary Park? Queen Mary Park is right around, I don't know if you can see my cursor. Queen Mary Park's like right in the middle here. Let's see if I can draw on it. Kind of a little bit higher, little higher, little higher, little higher, little higher, little higher, little higher. Oh, there we go, right there. Queen Mary Park shares a lot of businesses and residential. It is just north of our downtown core. Queen Mary Park has affordable living. It would be considered more of like a C area. I know I don't have it highlighted, but that would be considered a C area. So it's good for rentals. You have some primary homeowners in that area, and proximity is fantastic. So in order, write down the 4, okay? All right, so Marcus, we're going to use you. So if our main goal, Marcus, I'm sorry, Judy, we'll work you afterwards, okay? So I'm going to show you guys 2 examples. So Marcus, if I was working with you and your main goal was appreciation, cash flow, vacancy, and tenant profile, this is what I would do. If you want appreciation, you need to purchase near infrastructure that's going to eventually create a positive demand for other population to want to go into that area. So what type of infrastructure that's being developed now or in the future that's going to create a higher demand for a higher population or density in that area? That's when property value goes up. So things like transit, SkyTrains, LRTs, hospitals can be a good demand. You know, we have the Blatchford community that's being developed. It used to be an old airport in the middle of Edmonton. Now it's 560 acres that are being developed, right? So as long as there's, you know, something substantial for infrastructure, even schools can also help as well. But what's something that's positive that's being developed right now that's going to create a higher demand to move into that area, that's going to help us when it comes to appreciation. And it's not always being too close to it. So if a Costco comes up and you're like, I love Costco. Costco's are busy. I invest in Costco stock. That's where I want to be. You don't want to face it. You don't want to back onto it. And you don't want to be adjacent to it. You want to be far enough away where you're not close to density, especially if you're purchasing residential. If it's multifamily, you want the walk score. You want that high density, right? So just understand how it changes as well. With residential, you don't want to be too close because things like crime and everything else, noise, all that kind of comes with it. So anywhere between 400 to 1,200 meters near positive infrastructure puts you in the safe zone for positive appreciation, as long as that infrastructure is going to create a demand. Does that make sense? Was that like the worst, longest, like Ask Jeeves description ever? I'm going to work on that. I'm going to try and cut that elevator pitch down a little bit, okay? So if we're looking for appreciation, I would put you near our LRT. I would put you near the Blatchford community or the South Edmonton Hospital that's being developed in Edmonton. Okay. Now, secondly, if you're looking for tenant profile, I'd be looking at A or B areas. Okay. Those areas would definitely help with the tenant profile, and every area is going to be a little bit different, but the areas that have a higher alphabet, so like A, B, they are typically going to give you a larger selection of tenant profile, and they tend to be more primary homes in many cases, except around the university, then it kind of flips. And then if we're looking at vacancy, the more sought after areas tend to have lower vacancy as well. And tenant profile, yeah, so we talked about that. Now, so if you're looking at appreciation, I would put you on the left of the map in like the Jasper Place area. I would put you down in the Heritage Valley at the bottom of the screen where the new Edmonton Hospital is going to be, or I'd put you right where the Queen Mary Park community is, right up there. Yep. If you're looking for cash flow, I don't recommend purchasing in B or A areas if you're looking for cash flow and you're renting it out for long term, because you're not going to see the cash flow numbers. You're going to be either dead even or you're going to be cash flow negative. You need to be in either a C or a D area to see cash flow positive. If you're willing to convert your rental to short-term, mid-term, or a luxury rental, then you might be able to survive in those B or A areas. The B or A areas can also allow you to do room rentals. But typically you need more leases to be able to become cash flow positive in B or A areas. The more leases equal the more gross income and the higher probability of cash flow. So what do investors do here? If we're looking at a single family detached home with a suite and it has a garage, we look at having 3 leases because that's going to give you the opportunity for the highest amount of cash flow. renting out the main floor, renting out the basement, and renting out the garage. And for those of you that just went like, you can rent out the garage, yeah. In Vancouver, you can rent out broom closets as bedrooms. I've seen it. It's crazy. They literally sleep up. They sleep standing up. It doesn't make any sense. I don't know if there's like any beds that just strap you in like a ride at K-Days, but they literally, I swear to God, you sleep standing up, and they rent it out for like $1,500 in Vancouver. It's wild. It's like 50 square feet, and somehow people survive in it. I'm impressed. So here you can rent out garages. People don't live in garages. I mean, they could, but it might get cold, in December and January. They rent out garages for storage. And you can rent out a double garage for like $250 or $300. So if you're renting out the main floor, renting out the basement, and then adding the garage as a separate lease, that's going to help you achieve the highest amount of gross income and improve your cash flow. So if you ever have rental prices go down or expenses go up, there is opportunities for you to help improve your financial situation. Sometimes you just got to talk to a professional to find out what other people are doing to help with your situation. You're not in this alone. You can literally call myself, Santosh, or Anthony, test us, and we will go ahead and be happy to advise you what we're seeing right now. Okay? We got some stuff in the chat. Marcus, near the university, fantastic area. Near the university, just so you guys know, it's kind of right in the center of the map. It's the A just to the left. That's the university area. The U of A area is very, very sought after, very expensive. And seriously, broom closets, yeah, Google it. Any questions at all? Last thing I want to bring up, if you're like, you know what, Calvin, I want to achieve the most amount of cash flow positive. Where do I go? Where do you guys think I'd go? I want to achieve the highest amount of cash flow positive. Which community would you invest in? Type it in the chat. What alphabet? Yeah, there we go. We got the D. We've got some people listening here. D, maybe even D minus. You ever played a video game and you've never played the video game before and you go on like expert mode? What usually happens to you? Judy, John, I can see you guys on my screen, so let's just use you guys. So Judy, John, I know I can see your guys' facial reactions. Judy, John, if you play a video game and you go straight to expert mode right off the bat, you've never played it before, what's going to happen to you? What could happen to you unless you're just like this? So we can't, I don't know if we can hear, can we hear you?
Yeah.
You're going to die right away.
You're going to die right away. You're going straight first person shooter. I was thinking like a card game, but you went straight like, I love it. You're going to die. So you're probably not going to die in your investment. I hope you don't anyways. We're not wishing you to die in your investment, okay? So you're not going to die in your investment. We're just going to, but you're playing this game on expert. You've never done it before. Your probability of winning is very low. Would you guys say that's right? You probably can't beat Final Boss as much as you want to, and as much willpower is that you want to beat Final Boss, you probably won't be able to. But with practice, Judy and John, could you maybe beat Final Boss?
Yeah,
With practice, yes.
Takes practice. So what I'm getting at is with the D areas, I might recommend that more. I do recommend that more for more experienced investors that want to achieve higher cash flow. So if you have the infrastructure and systems in place, you can be extremely successful in D areas. If you don't, you can die, or, close to it.
See.
Yes.
I would go to Jasper Place, C, right close to U of A and the A neighborhood.
Fantastic balanced community. Yeah. Fantastic balanced community. Because in there, you're able to get in very affordable. You're going to have relatively low vacancy rates, a good selection of tenant profile. And if you purchase near the West Valley Line LRT, you might even be deemed for some great appreciation down the road once it's completed. Fantastic choice. Okay. Any questions? Do you guys have any questions? Anything else in the chat? I mean, you guys, I'm going to allow you guys to unmute for a second here. Does anybody have any questions about the neighborhoods right now? All right. I must have did a superb job. Let's keep moving. MLI Select projects. So if you guys haven't heard of the, I mean, you guys, first time hearing about the MLI Select projects, here's examples of two. So in Edmonton right now, we have one that's active. So Allendale's just south of the U of A, and it's for $2,089,000. It is a 6-unit building. So as you can see here on the left, it's the one I'm focusing on the left here. Yeah. So it's a 6-unit building with a garage suite. Pretty fancy. And something like this would definitely fall within the MLI Select program. And it's in a good location. You may not achieve the same cash flow because this is a B community, but you will achieve lower vacancy rates and you will achieve better tenant selection. And if the market ever contracts, meaning that we don't have the same rental rates or the same low vacancy, the better communities tend to be more protected. Does that make sense? So when shit hits the fan, and yes, I can say that word, when it hits the fan, you don't get hit as hard in these more sought after communities. Now, if I take your focus on the right, this is a property that recently sold. The sold price was 1.85, and the buyer purchased this through the MLI Select program. You'll notice there in the bold lettering right below the picture where it says upper rents $18.95. This was listed in May of last year, June of last year, I think it was. Do you guys know what rents are now? So it's $18.95 plus utilities. Rents have gone up $150 in the last year. I think $150 to $200 since last year, which is a huge bump. And we got in D areas, the value depreciates, especially for condos. Definitely. There's more volatility in those D areas. You're absolutely right, Fawn. All right, let's keep going. Oh, you know what? I got you set up as a
Technical
link.
error, so
No. I actually got a link. I put links in there just
okay,
to
we're back.
Jess. Yeah, there we go. So some professional partners we can give shout outs to. You know, we have Samuel Property Management. So if you guys have anybody, if you're looking at doing a value add project, a BRRRR, or maybe you have one of these buildings that you purchased and you need to get some things done, some repairs, you don't have to be here in Edmonton. I'll be honest, I only visit my properties twice a year, spring and fall. Okay? Anytime the weather changes drastically, I just make sure that it's prepared for it, but you can have professional partners that do it for you. I'll give you an example. Everyone likes to talk about the toilet that's always running or need to replace the seal, whatever it is. If you're in Vancouver and your tenant messages you and you can manage from a distance, because you can find someone that does tenant acquisition. Most property management groups can offer that service as just tenant acquisition. They'll find the tenant for you. They'll screen the tenant. They'll do the initial walkthrough. And then once the tenant's leaving, they'll do the final walkthrough. You can do the day-to-day management. You can 100% do it where you're not paying 4% for commercial or 10% for residential. If it is commercial, I'd probably recommend a property manager. It's more affordable that way. But if it is residential and you want to manage it, you can save that 10% per month and put it in your pocket. So situation happens. You're managing your property. Your tenant calls you and says, hey, Calvin, my toilet will not stop running. And in my head, I'm thinking, okay, that's a pretty easy fix. It's a flapper. There's something happening in there. I will call my handyman and say, hey, Sam, can you get out to my property as soon as possible? It sounds like I'm paying extra for water than I need to. He's going to go either enter the code in that I give him at the front door. That's a one-time code, or I give him access to the contractor key safe that's accessible via a code. He goes in, takes a photo or video, sends it to me. I say, yes, can you fix it? How much? He's going to say $200. I say, go ahead, send me a video when it's done. It's all done. I pay the invoice, message the tenant. Tenant, are you happy? Yes, perfect. Problem solved. Takes me 5 minutes. So if you have the right partners, you can very easily get this done. And what I've been told, because I work with clients all across Canada, in some of the bigger cities, it can be very difficult to work with trades because trades are so busy and there's not enough of them. So they jump from job to job. Things don't get done in a timely order. You may never even see your trades ever again once once they start a job. They may never actually finish, but you don't have that same problem here. So your life actually might be a little bit easier. But we have these other professionals to make your life easy, whether it's, property management to the right, mortgage broker, that's investor focused to my bottom left, property inspector, also very important, and then lawyers that also understand the investment world. One event that you need to know about, not even just should know about, but need to know about, we have the largest 2-day real estate focused investor conference here in Edmonton, September 21st and 22nd. And we have some of the top names in the industry collaborating for the very first time. So Who's heard of Alfonso Quadra with Wealth Genius? Wealth Genius is Canadian wide. He is going to be speaking there for the 2 days. He is an incredibly passionate, inspiring individual. Tim Sy would Trust Your Talent. He's very heavy in Ontario and Alberta. We have Patrick Francie, which is one of the original founders of RAIN. We have Michael Ponte. From those of you from Vancouver, you should know the Savvy Investors Group. If you don't, he's fantastic. We have Wayne Hillier. He has one of the most successful real estate investing podcasts. And then you'll notice some other familiar faces as well. Stephanie Hanlon. She's an Olympic gold medal coach that we had to fast track her coming back from Paris this summer here, so she could be a part of the event. So this is a 2-day in-person event in Edmonton. Tickets are extremely affordable. I think we're 80% sold out right now, so you still have an opportunity. If you want to get a deep dive into what's happening in investment real estate from the top professionals that speak Canada-wide, and be in a room with other individuals of similar interest, opportunities for JV partners, meeting your professional partners, this is the room you want to be in. So hopefully we get to see you then.
Okay, so time to deep dive into the Calgary market. So a few things I wanted to cover. Calgary, Alberta in general, but especially Calgary, has historically been seen as a oil and gas market, right? And I think this chart really is interesting to look at. It's from the Calgary Economic Development. And it shows the change in total GDP between 1987 and 2021. And as you can see on the top kind of green box, we used to have 47% of our total GDP that was coming from essentially oil and gas, agriculture, mining. A big chunk of that is oil and gas alone. And in 2021, we're down to 29%, and that's actually continuing to shrink. Now, I actually see this as a good thing because, as we showed earlier, it's not like oil and gas is going away in Alberta. It's not like our production is going down or anything like that. It's just that we're adding all these other things that are diversifying our economy significantly. And one of those things, we'll go to the next slide, is tech. The tech sector in Calgary historically used to be very linked to oil and gas, where yes, we had tech companies, but most of them were servicing oil and gas in some fashion, where a lot of the tech that we're getting over the last few years now, the tech companies moving in, have nothing to do with oil and gas. We're seeing like large dealership software company that moved recently. We've seen a bunch of startups, some robotic companies as well. And as you can see from that article, just in 2022, Calgary added 50,000 tech jobs, which is very significant. There's a lot of money from venture capital coming in to the tech sector now. So that's been a big part of diversification. And one of the reasons for it is actually kind of the tail end of our last oil and gas boom. Because in the downturn, there's a lot of oil and gas companies that moved out of downtown. We saw really high vacancy with office space. And the tech sector saw this as an opportunity to bring in staff to Calgary and have a place where they can pay their staff well, but their staff can actually afford to buy a house, right? Where a lot of these companies are used to markets that are unaffordable. And Calgary has historically seen really high level of desirability in terms of lifestyle and proximity to the mountain and all that stuff. Another one that's been interesting to see, and I put that one specifically because it kind of illustrates the attraction of Alberta as a place to do business. De Havilland. So De Havilland moved their headquarters, and they're building a test airstrip between Strathmore and Chestermere, which is just east of Calgary. We don't even have much of an aeronautic industry in Calgary. So for them to do that, they really had to see the positive business climate that we have in the area. They're already employing 750 people in Calgary, and that facility could create up to 1,500 jobs as they're building it and operating it. That's also a really good opportunity for some of the areas outside of Calgary. Namely, Strathmore is a market that I think has a lot of growth from that facility coming nearby. For those who don't know, Strathmore is a small town east of Calgary, about 15,000 population. So a facility like this has a large impact on the desirability of that area.
Okay, so next, let's jump into the best neighborhoods or where to invest in Calgary. And Calvin did a great exercise earlier, and I'm gonna say it's gonna be something very similar. So depending on what your goals are.
Yeah, sorry, I just want to say we're about as good at graphic as Calvin is for a
Yeah,
map.
that's right.
So
Our graphics not all that much better either. So this was done in Microsoft Paint, by the way. So and yeah, Jess added all the beautiful circles around. So yeah, there I saw in the chat. There's no D area in Calgary, and yeah, me and Anthony agree. We don't really have a real D area. We do have areas that are less desirable, definitely, but I wouldn't say any.
and not as a whole, right? Like I think to this point we might have some very small pockets of some neighborhoods that could be considered the areas, but we don't have any single whole neighborhood in Calgary that we would classify as the areas.
Yeah. So we do have C minus. So yeah, so in this map that you see on your screen here, so this is the north part of Calgary. Calgary's a lot bigger than Edmonton, so we had to split the map into two. But this is kind of the north of the Trans-Canada for the most part. So you can see the sweet spot. So if you're looking for something that's a good mix of cash flow and appreciation, then we like to recommend investors look in the B neighborhoods, right? So you're kind of in the middle, the sweet spot area. And usually in these neighborhoods, you can get a good blend of cash flow. The properties have a good rent to price ratio. So they do tend to work well. However, if appreciation is your priority, you're willing to sacrifice a bit on the cash flow, or you'll find a break even, then we'd recommend you look elsewhere. So typically your A neighborhoods or A minus areas, right?
Or especially that rectangle, the red rectangle we have there, is A areas that or A minus areas that have good potential for development. So there are areas that are starting to see a lot of infill activity. They're starting to see a lot of those MLI select projects we're talking about. They're seeing some luxury properties coming in those spots.
And your timeline of how long you want to hold your property also comes into play. So if you think you're going to hold it for 5 years and you might be planning to redevelop the property, then we'd recommend you look somewhere where there's a lot of redevelopment happening, or we see redevelopment kind of spreading out into that area in the shorter term, right? So yeah, it really comes down to what your goal is. So yeah, kind of the roughest areas of the city generally are on the east side of the city. So you see our C minus area. So for those who are familiar with Calgary, this is kind of the Forest Lawn and surrounding areas, right? Generally the least desirable area from an investor perspective, but they do tend to have the best cash flow, because for those who are familiar with the rent prices in Calgary, the rent prices in the best neighborhoods for 1,000 square feet bungalow, for example, and the rent prices in Forest Lawn, for example, for 1,000 square feet bungalow, they're not all that different. They might be a few $100. There might be a few $100 difference, but the price jump is significant between the nicer property and something that's more less desirable. So you tend to get really good cash flow in the least desirable areas. So yeah, so this is
it's a balance with your goal on tenant profile, right?
Exactly.
Like Calvin mentioned earlier, it's kind of like call it the expert area. We know people that only invest in the worst of neighborhoods and are doing really well doing that, but you also need to be ready to be on top of your tenant management, and sometimes it's a little bit more difficult of a tenant profile.
Exactly. So yeah, I see in the chat, Vanessa, you said it right. The best cash flows in the C areas. You tend to have better tenant profiles in your A and B neighborhoods, right? Yeah, depending on goal, we like to recommend that investors buy close to infrastructure projects. I think Calvin alluded to earlier, which tend to have better prospects for price appreciation down the road. So if you invest in what's like a B area today, but they're planning to do, say, the Green Line development, which if you've been following the news, it's a bit up in the air right now. But if you buy close to infrastructure projects, you're generally safer off in the longer term. Okay. Okay, so over here, this is a map that we got from the Calgary Real Estate Board, but essentially what we wanted to highlight is the inner city area, which is highlighted which is kind of labeled in purple. Inner city tends to have higher density. There's a lot of redevelopment happening in Calgary inner city, but the trade-off is cash flow. The cash flow is terrible if you're buying in an inner city neighborhood. Often, if you're looking at older properties, they're often in need of major renovations or they're ready to be torn down. So your repair and maintenance costs are higher. Your rents aren't great because they're older properties, and you're paying a premium price because you're buying expensive dirt, right? So we generally don't recommend investors look in the inner city area unless you have a plan to redevelop the property in the short or medium term.
You know, you could say, well, could I just buy an infill inner city and have a brand new property? Well, you can, but then the purchase price is so high that it's really difficult to make those numbers work. In almost all situations, you're going to be cash flow negative, with the exception of those multifamily MLI select projects, which don't tend to cash flow great, but at least will have usually a 1.1 DCR, which is the requirement for qualifying under MLI select.
Okay, so next up, we're going to cover the secondary suite amnesty program. So this is a program that is unique to Calgary. And what the city of Calgary is allowing you to do is, if you have an existing illegal suite in Calgary that was built prior to March 2018, you can legalize that suite under a relaxed set of requirements. So often it's just meeting life and safety requirements like your egress windows, smoke detectors, etc. And the cost to legalize these existing illegal to legal suites is often under $10,000 in most cases. This doesn't include any cosmetic renovations you want to do afterwards. Okay. What's even better is the city launched a secondary suite incentive program a couple of months ago, and now they're giving you up to $10,000 to legalize your suite. Or if you're building a new suite, this incentive also applies. So the city is really trying to incentivize homeowners and investors to legalize their existing illegal suites and make them into legal suites. Now, the nice thing for you as an investor looking at Calgary is the ratio of illegal to legal suites. If you look on MLS, it's about 9-1. So the majority of suites in Calgary are still illegal, and we have thousands and thousands of suites that need to be converted to legal suites. And this is a quick and easy way for you to buy something, do a quick value add, and often just by legalizing your suite, you tend to add about $20,000 to $30,000 in value, depending on your location, right? So it's a very quick way to legalize, and then you have a legal suite moving forward from that point onwards. And it helps you with the resale. If you decide to sell that property, that legal suite property down the road, now your buyer pool is opened up. A lot more people can qualify because now you have 2 units instead of 1. So we always recommend people go down this route. It's a very easy way to do some quick forced value add. If you have any questions about this program, feel free to reach out to us. We've done tons of these conversions, help lots of investors through these. So we're very familiar with navigating the city as well when it comes to these. So, okay, next up, cash flow. So cash flow is on everyone's minds. Everyone comes to us and say, I want cash flow, which is understandable. And then the next question is, well, can I buy, think of a condo or a townhouse, and then we have to say, well, hold on, hit the brakes. So to cash flow in Calgary, you need a minimum of 2 units. Okay. So if you're thinking townhouse or condo,
in most cases with today's rate, we'll just add that. In
today's rate,
edge cases, but like the vast majority of the time, you need those 2 units with today's interest rates.
Yeah. So what we like to recommend is investors focus on suited properties. So that could be a suited semi-detached, like what you see on the left side here. or it could be a suited detached property. In this case, it's a bi-level, so you go through those doors, there's a set of stairs that goes up, another stair going down. So these types of properties, generally anything built in the 60s to 80s, your bungalows, bi-levels, some of your split levels tend to work great, especially if you buy in a B neighborhood, right? Okay, so next. Okay, so yeah, we talked about this. So why 2 units? So we have some rents here for you. Why 2 units? So on the left, you'll see a detached bungalow with a 3-bedroom basement on the main floor and a 2-bedroom finished basement. So not a suite, just a finished basement. You can buy these for, around the $600,000 mark. So let's say $600,000. This will rent for $2,800, give or take. Okay. And if you take that same property, now you add in a legal basement suite, also the 2 bedrooms in the basement. You pay 50 grand more. You buy for 650. The main floor rents for 23. Basement goes for 15. Total rents are 3,800. So you get almost $1,000 more, right? So you do pay an extra 8% upfront in the purchase price, but your rents are higher by 35%. So this is a route we often recommend investors take. Go with the suited properties.
I'll just answer a quick question for you, Chris. That used to be true. So the question is it true Calgary only allows 1 suite per property? Before the blanket rezoning, that was true. You were allowed either a backyard suite or a basement suite. You can now have a backyard suite and a basement suite on the same lot.
Okay, so here we have a case study. So this was a real example. We helped a client with this. So this was a tenant-occupied, semi-detached property. It's located in Canyon Meadows. Okay. Will your example actually cash flow? So yeah. So let's take a look at this. Right. So this was a semi-detached property. It had a legal suite, and it was purchased this February for a little over $500,000. It had 2 bedrooms, 1 bath up, 2 bed, 1 bath down. The condition, it wasn't brand new, super renovated, but it wasn't like run down either. It was tenant occupied. It was an average condition. And this was tenant occupied at the time of purchase, so they were paying $1,800 up, $1,500 down. So here are the numbers. So on the right, on this chart here, the main floor was $1,800, the basement was $1,500. This property also had a double detached garage. Now, Calvin was saying in Edmonton, you can get $250 for a double detached garage. In Calgary, we get a lot of hail. You get $400 for a double detached garage, right? And if we factor in a 3% vacancy, which takes out $111, we add in our expenses, so property tax, insurance, repairs and maintenance, utilities are often paid by the tenants, and your financing. So assuming a 20% down, if you look at the bottom, at a 6% interest rate. So we're not trying to put a low interest rate there. So we put a 6%.
That's what they had at the time, right? It's February again, so.
Exactly. You can see the cash flow works out to $492, which is pretty decent on a semi-detached property in a B neighborhood. Often, if you go to a detached property, the numbers are going to be similar. The only thing that often changes is your cash flow. So on your detached properties, your cash flow would be in this same neighborhood, it'd probably be closer to $200 instead of closer to $500. Because the rents between a semi-detached and a detached property don't change all that much. What changes is the purchase price, because with a detached property, you get more land, right? But the same main floor unit between a semi-detached and detached doesn't change as far as how much you can get for rents.
It's very minimal.
Yeah, it's very minimal. So, yeah, next. So.
Yeah, so we were talking about some MLI projects earlier. Calvin showed a few examples in Edmonton. I kept it simple on the Calgary side instead of doing a bunch of projects. Most projects end up being priced around a 1.1 to 1.2 DCR for Calgary. What's a DCR? That's the debt coverage ratio. That's what CMHC uses to qualify your loan. So that's essentially your profit margin. 1.1 DCR would be a 10% profit margin or 10% cash flow. Most projects will end up around that range, which means for 4-plex with secondary suites, so 8 unit total. Right now, we're usually around the 3.2 million mark. It depends on which neighborhood. 10 units are usually around the $4 million mark, and they kind of follow that 1.1 to 1.2 DCR. Most of the projects we see right now are pre-constructions. That could change as we go into next year. Obviously, right now it's in the beginning of that high demand for these kind of projects. So most of them are still in development stage or early stages of construction. There are advantages in going to pre-construction. However, for something like this, like we discussed, the MLI Select take a lot of time to get approved. The turnaround is still around 4 to 6 months in some cases. So going with the pre-construction actually allows you to get all your stuff ready and get your loan at the time of closing instead of having to come up with a bridge loan or something like that in the meantime. So if you have questions on MLS Select projects, let us know. A lot of those projects are off market and not on MLS, so we can help you source them and run the numbers with you as well. So next up, there's a few sponsors we wanted to give a shout out to. These are all people we've worked with for a long time. They've all been great to us. Lane Waters is a phenomenal mortgage broker, especially with investors. This is something I wanted to bring up is especially when you start as an investor, find a good investor focused mortgage broker. Just as much as you want to have an investor focused realtor, you want to get an investor focused mortgage broker because they'll figure out the best path for you going forward as you grow your portfolio, which lenders to use first, how to structure your financing. And that's really important. 2020 home inspectors have been awesome. We've worked a lot with Jordan there and some of their other home inspectors. Again, when you're buying a rental property, you want to make sure, especially if it's a long-term hold, that you're not picking up on any problems that any problems that could be expensive to fix. Now that being said, most older properties will have a laundry list of items. You'll get a report that's like 70 items. A lot of those are often small and easy to fix, and that's something that these guys are great at, is figuring out which problems are a big deal, which ones are easy to fix. Then Holistic Roofing's been a great partner for us with anything from re-roofing jobs, exterior work like siding, especially hell right now, gutters, things like that. So just want to give them a thank you. But we've used these personally for many years as well.
Yeah.
Then next up, we have some events. So next week on Wednesday, we are going to be hosting an in-person investor meetup. For the ones that are not in Calgary, we do not live stream this event. However, we record all of them. And we usually post them about a week after on our YouTube channel. So you can definitely check that out. If you want to sign up, you can check out calgaryrealestatemeetup.com, or you can go on our Facebook group, which is Calgary Real Estate Investor Hub. And we post all our events on there as well. We'll also be going to be attending Recon. So all the ones that are going there in Edmonton will be there as well.
Fantastic. Well, if you guys would like to learn more, and we do understand that everyone's journey is unique, which keeps it very exciting, and book your meeting. This is an opportunity for you guys to go ahead and meet with us one-on-one, whether it's someone from my team, myself, or with Santosh and Anthony. So really understand what what does your path look like and how can you do it with confidence? A lot of people don't have clarity of what their next steps should be. And so if we can help add that confidence, then even better.
Just mention something quick. I guess we had a technical issue on that slide. Just keep in mind that the link, if you want to get in contact with us, is calgaryreihub.com. Just a quick heads up. Yeah, we'd be happy to have a chat with you, discover what you're trying to achieve. We can help you review your current portfolio. We can help you look at buying other properties down the road. So, yep, that's the next slide.
Q&A.
And we'd be happy to answer some questions if you guys have any more questions.
Absolutely. Any questions?
I'll be able to unmute.
Yeah, just can you unmute
Yeah.
anyone?
Yeah, feel free to unmute yourself and
Yeah,
ask. We're happy to answer all your questions now. So
absolutely. And if we don't have any questions, it just means we did a really good job of pulling back the layers of the onion of investing in Alberta real estate. So
And you can always reach out to us as well if you have more questions.
Timeline to legalize a basement suite in Edmonton. Still lots of opportunities to in Edmonton. Yes, there's definitely lots. Even though the market's been busy, there's still lots and lots of opportunities to be had. You'll see very quickly as you start to dive into it further. Timeline, this is what I recommend. This is my hack. So say we find a property that has the opportunity for a basement suite. So, direct access from the exterior to the basement. When you remove conditions, I would have something, well, actually beforehand in your offer, I would have something that you have the ability to pull development permits prior to your possession with the seller's approval. So then there's always this like quiet time between condition removal, meaning that you've decided to move forward with the purchase, and possession. And if you can use that time to pull some of those initial development permits, it'll actually reduce your time frame of just sitting around and waiting, because any city you go to, permits are usually the one thing that slows you down. So if you can get ahead of it and start doing that prior to possession, your holding costs, your borrowing costs, and your ability to tenant or refinance or sell the property afterwards will happen much faster. And again, you also want to make sure that you know what time of year you're purchasing in and when that completed product's going to be. So if you're flipping, if you buy a property now, your possession's 45 days out, your renovation's going to be 3 months. Where does that put you? And does that put you in a position in the market for success? Same thing with, the BRRRR method. It's always good to reflect knowing that we are seasonal, right? There's more activity in the warmer months than there is the colder months. But typically, when it comes to the timeline, I would factor in 6 months, but I know you can do it in 4. Always have a longer buffer. So when you're running your numbers prior to, give yourself like 1 or 2 months buffer room, because you never know what can happen. And a lot of these things that will happen are outside of your control. So allow that buffer when it comes to you running your numbers prior to. You'll see better success. And again, take that opportunity between condition removal and possession to get some of those permits rolling, and you'll find it to be a much more streamlined process. Yes, I think there's only pretty much every community in Edmonton you can put a legal basement suite in. There's 1 or 2 communities that are resistant to it, but you probably wouldn't be investing in them from the rental side of things anyways. So yes, the city of Edmonton just went through massive rezoning. They haven't changed the rezoning in like 25 years. More or less, they simplified it. Now it's all RS. So you have the ability to do that. You can also do a lot of density in inside lots as well. But yeah, you can.
Yeah, I can cover that one.
Sure.
Sorry to interrupt. Yeah, so Jessica, to answer your question and Chris' question, yes, there was a moratorium on new energy, renewable energy. That being said, it hasn't actually slowed down significantly on the longer term of investing. Surprisingly, I honestly expected a bigger bump from that moratorium, but it's something to look at. I honestly don't think that's going to be a long-term trend. So I think it's just going to be a bit of a bump in the investing.
Yeah. Now, Marcus asked a question about Edmonton neighborhood zone for basement suites. I just want to kind of build upon that question relating to the Calgary market. Previously, the city allowed basement suites in all properties. However, the timelines for approvals varied depending on your zoning. So if your property was zoned RC1 previously, it typically took anywhere from 8 to 12 weeks to get an approval for a basement suite. Whereas if you're zoned RC2, it took about a week and a half. The city of Calgary, I'm not sure if you've been following the news, but if you have, the city did a blanket rezoning, and all properties are essentially upzoned to now what's called RCG, which allows for higher density. So you essentially skip the development permit phase that took that 8 to 12 weeks. Now you go straight to applying for your building permit. So the timeline to get a building permit for a basement suite is now 1 week. So it's a lot faster than what it used to be. So, and it doesn't matter where in the city you are, as long as you have that RCG zoning, 1 week, that's it. So it's a lot faster now.
Is it worth adding a lane suite in either city? So a lane suite, if you're referring to like a lane suite or garage suite, I've owned garage suites before. I would say the benefits of a garage suite or a laneway suite would be for tenant profile and lower vacancy, but not for cash flow. The cost to build and the return on investment, if your goal in your purchase is fueled by return on investment, in the sense of like cash flow, I would say no, you can find better options. But if it's fueled by, you know, having tenants for the long term, less turnover, and just consistency, then fantastic. I also know a lot of investors that will live in the garage suite and then rent out the dwelling, whether it's one unit or divided into two. That's a really popular technique as well. So I think it depends on your purpose of application on whether it's a good investment or not.
Yeah, and it's the same thing for the Calgary market. We're seeing cost to build those around the $200,000 range, which shocks a lot of people, right? But you're essentially building a whole house. It's just smaller. You still need to run utilities there. You still need furnace. You still need kitchen, like everything you would need in a bigger home. So they're not cheap to build. Now there's one exception that we see that can sometimes make sense for cash flow. They never make sense to build from scratch. However, there are properties that have already a backyard suite. The challenge with them is they are often larger two-story properties that don't really make sense for an investment. But if you can find a smaller bi-level or bungalow house that has a backyard suite in the back and you buy it existing, sometimes those can cash flow decently. The resale value on those suites, at least for the Calgary market, is unfortunately a lot lower than the building cost, which is also why we don't recommend building them. The day you build it, you essentially lose on value from what you've spent. So.
Okay, the next question, is Zumper a good website to get average rent prices, like Rent Faster? Zumper is not as popular in the Alberta market, so you don't have as many data points if you use Zumper. So the data might be a bit skewed. So we usually recommend Rent Faster, which is kind of the go-to for investors in Alberta. So
yeah, Rent Faster and Facebook Marketplace are probably the two biggest sites for rental properties in
Marketplace, though, it doesn't give you stats or yeah. So
fantastic. Thank you guys. Thank you guys so much for joining us. And we ended up making it, we never end on time. And I mean, it's right on the nose for 2:30.
Yeah.
Our next webinar is going to be January 25th, which is a Saturday, same time. This time, we're going to be focusing on what should your strategy look like, or what strategies we're seeing the most success in going into 2025. Where do we anticipate the market to be going? So we are going to be taking out our, we're going to be doing our fortune telling of where we feel like the Alberta market's going, specifically for Edmonton and Calgary, what strategies are going to fit the direction of the market, and answer any kind of questions you might have based on your own personal investment journey. We're going to make it very interactive, maybe even more so than today, and it's going to be a great extension. So we highly encourage you to sign up for that. I believe the link is available. If not, you'll get emailed. You'll get emailed afterwards of the link, so you guys can register now. Just add it in your calendar so you can't forget. And it's been a pleasure.
Yeah, thanks everyone for coming.
Do you guys like our wedding music? We wanted to make it very like calming, on this Saturday. So thank you guys for joining, and big shout out to Jessica, our back end, made sure that this actually happened because we are not tech savvy, and she was able to crush it. So thank you so much. Big shout out.
Yeah, thanks a lot. Have a good one.